Let's now have a look at the format for the statement of profit or loss and other comprehensive income. Some of you might know this as the income statement. That's long gone, that name change, guys. We've got a new name, please use it. So again, we must have the company name, then the title of the statement, statement of profit or loss and other comprehensive income, and then I must date it. But remember, this time the dating is for a period, right? It's an income concept. So statements of profit and loss and other comprehensive income for the period ending. So for the period ending 31st of December 20X4. Take note, it says for the period ending, not at. Okay, very different. Statements of profit and loss is different to the statements of financial position. Again, we're going to have the 20X4, 20X3. We should state that it's in rands and what any rounding is, same as we did in the previous video. I'm going to leave that out because we're just running out of space. First and foremost, let's understand that there's two different formats for the statements of profit and loss specifically. First of all, you can classify expenses either by function or by nature. So we're going to use this first one. We're going to classify the expenses by function. Now, it's an important distinction to be made, and if in doubt, the questions that are given to you are silent on this matter, you will assume classification of expenses by function. I'll make this clearer just now. What is always going to be there is definitely your first line item, which will be revenue. Revenue is just income, but it's income in the normal operations of the business. So if I am into building tables and selling them, normal income for me is the revenue or sales from selling tables. If I'm still in the same business, I build and sell tables, but I have shares that I've purchased as an investment in my business, and when I sell those shares, I make a profit or I receive dividends. That's not my normal operations, right? My normal operations is selling tables. So that's other ones will be the dividends or the profit on sale of shares will be other income, profit or revenue or income from selling tables will be classified as revenue. Okay, top of the statement. Then what's important, if we're classifying our expenses by function, we must have this next line item called cost of sales. Those are the sales costs or costs directly related to selling my tables. Okay. Now, in that cost of sales, we will do a little calculation in the workings. Just, I'm going to do it in a different color. It won't be on the face here. The cost of sales, just from a working perspective, will be made up of opening stock plus purchases minus closing stock. I want you just to get used to that working. It's not on the face here, but it is something that you have to learn and think about, okay? Because that's how we calculate cost of sales. I'm going to rub it out. Take a second, write this all down, because that's not part of the format I'm asking you to learn. Okay, so now revenue minus cost of sales. If I put an X in a bracket, it means a negative. Gives me a line item called gross profit. It's a very important figure, and companies use this a lot. Later on, you'll see something called gross profit percentage. After gross profit, there will be all the other income line items, our dividends or profit from shares, if that's not our core business, and we'll call that exactly that, other income. Okay, next up, we must classify or put all distribution costs together. So back to my table scenario, let's pretend I've got a whole bunch of shops countrywide as well as a factory, and what I do is I have to send out all my tables to these different shops. Well, there's going to be trucking expenses, there's going to be petrol for the trucks, etc. So all those distribution expenses will get grouped together, and that is an expense, so it's a negative in brackets. Next up, I will have all my admin expenses. So my administrative expenses. And those administrative expenses will be things like my accountants, my cleaning ladies at head office, my marketing people, probably management as well, unless they are direct operations managers. Those will all get grouped together as an expense. Then any other expenses that can't go into those first two, I will just lump together and call other expenses. Some of those I'll have to disclose separately in the notes, but for now, that is fine. Okay, then my company probably has some form of debt. I've probably borrowed money, and now guess what? On that money, there's going to be interest charged. The banks don't give you money for free. Interest, we will group under a heading called finance costs. I must have a separate line item for that, please. It can't be put in with other expenses. So all interest costs go into finance costs. Okay, then I will do something. I will add it up, and I will add up profit before tax. I have a total, and generally over here, I'm going to have some type of note. I'll probably have a note for revenue, and I'll probably have a note in the financials for profit before tax. Excuse me. Okay, so profit before tax, then we're going to have income tax expense, which is how much the government's going to take from you, not just in the current period, but sometimes in the future periods. We're going to have two types here. We're going to have current tax expense and deferred tax expense. For you, it's nice and easy. It's going to be 28%. We assume only current, but that is going to get more complex later on in your studies, please. And that will come off as an expense. Add up again, and I have profit after tax. Okay, now in the olden days, income statements, as we used to call it, stopped here. But now we've got a new type of income, okay? I like to call it the politically incorrect income, income that I shouldn't be using for valuations, etc. And that is going to be called other comprehensive income. Okay, you're not really going to deal with this, but other comprehensive income is going to have two types, items that what you call may be reclassified versus not be reclassified. That's a bit beyond the scope of this course, but what I want you to understand is that there will be a gross amount as well as a tax amount. So let's just look at the first one. Let's pretend we understand what a revaluation surplus means. So we might have a revaluation gain on a building, okay? A valuer comes in, gives us an expert valuation. That can't go into profit and loss because that's not part of my normal trading activities, right? So I do this revaluation. One side of my journal, I increase the building. The other side, I put through this other comprehensive income, which will be kept separate when it lands up in equity. But what I have to do is I have to split out the tax component from that. Okay, and remember I put a block, put the net amount on top. And what I do next is I add it up. Let's pretend there was nothing in last year. I then get to a thing called total comprehensive income. Okay, ladies and gentlemen, this format, very important. Please don't dismiss the heading and the date, etc., and how I word that heading. Okay, that's very important. Now, what we do need to do is we need to understand that there's a different type of layout for the statements of profit and loss. We did the first one by classifying the expenses by function. And expenses here also mean cost of sales. What I have to do now is look at the second one, where I look at the classification of expenses of expenditure by nature. Okay, I'm just going to quickly open up something on my laptop here next to me. Give me a second. Apologies about this. There we go. Now, by nature, we're still going to have our two headings. Okay, being the current year and prior year. Revenue is going to be the same. That's not an expense, not going to be messed with. But you'll note here that there is no cost of sales. Okay, so I'm going to write no COS, no cost of sales. What we are going to have is we'll take each type of expense and put it by the nature to which it relates. And you'll see what I mean now. Let's put revenue and other income first to get those out the way. And then we're going to look at the expenses by nature. I'm going to write them out in a different color pen. Okay, so we might have changes in inventory. Very similar to what I did in my previous page when I did that little extra working about cost of sales. Okay, so changes in inventory. I might have raw material and consumables. Okay, glue, nails, screws, etc. Not part of major raw materials for my tables. Used. Okay, I might have employee benefits, salaries. I might have depreciation on assets. And this list can go on for quite a bit. Okay, but what I do have to have, I will still have a item for immaterial or small expenses to go into, and I still have to keep my interest expense separate. So I'll have finance costs. Okay, so along with that, I will then have my normal total, and that will give me profit before tax, and the rest is all the same, the tax expense, other comprehensive income, etc. Okay, so I hope you can see the difference by classifying by nature the expenses versus classifying by function. When I say function, you'll notice I always will split out cost of sales. Okay, and then I'll have specific distribution, admin, and other expenses. Please learn these formats. You need to know the classification by function more importantly than the classification by nature, but the question can ask you for either way. 99% of the time through your studies, it'll be by function. Also remember that this is financial statements currently per IS1, which means companies. You can apply it to CCs and partnerships, but is not required, as partnerships and CCs are not under the Companies Act requiring IFRS because they're not companies, right? Okay, let's move on. Statements of changes in equity up next. Thank you.